Welcome to FinMet Mondays, your number one podcast for all things gold.
A very good morning to all of our listeners, and thank you so much for tuning in. Sunil, lots to discuss in today's podcast, especially. We saw the ECB raise interest rates by 75 basis points. We saw the dollar lose some ground as a result. And in turn, we saw gold uh, edge higher for the second consecutive week because of a drop in the dollar. But one of the things that I think is concerning is the extent by which gold is actually showing that it can rally and respond to this drop in dollar, and it's not been much, it's not been very significant. What do you think is the reason why gold is not able to actually hit higher highs, even though it has been, but not to the extent that we would expect it to be?
Good morning, Sean, and happy Monday. I think that's a very good question. I would say that the key word is consolidation. I don't think gold is bullish right now, but I think gold is consolidating at these 1700 levels. We can say that from a technical point of view because in the last 2 or 3 days, what we've seen is in each of these days, gold has made a higher low and also higher highs. So that shows basically that the trend is upwards. It's not dramatic, but it's basically an indication that we're getting into a consolidation phase. So I expect gold to continue to trade in a range for the next few days as it consolidates at 1700 levels. And I think that's backed up by the fact that besides the technical levels, also from a fundamental point of view, we're seeing some very good physical buying at these levels, and that's continues to support gold. But also the fact that for producers, a level below 1700 could be quite painful, and they may actually look at reducing production. So that's why, again, the 1700 level is a quite important level for gold. So I see consolidation at these levels.
This week, we also have the CPI index releasing this Tuesday, quite early in the week. And what do you think is going to be the impact of this of the release of this indicator? According to me, I think that inflation would really have to cool for us to really see some advancements in gold. But what's your take on that?
No, I agree. I think everybody expects the Fed to do a 75 basis points increase. The CPI number, whatever it is not going to change that. And so the impact of that, the market feels is going to be a more stronger dollar, and therefore gold will feel the impact of that and be a little bit weakish at that point. So that's why I think you're right. Gold can't continue, cannot suddenly break out of the current range right now.
Finally, Sunil, I think it's worth mentioning the contract that FinMet has signed with DGCX as well. It's a huge milestone and a huge achievement. Could you speak a little bit more about what FinMet plans to do, or what FinMet has done for the exchange, and what the what the agreement is basically?
We're quite excited by the innovation that DG6 has shown. They've basically started two contracts, a spot contract and a short-term futures contract. And the purpose of that really is to allow bullion traders and jewelers who physically hold gold to be able to enter into a sell-buy or a repo transaction whereby they can unlock the value of their holdings while at the same time being able to buy the gold back for future production. So this in a way will add to the liquidity of the market and will allow banks to provide liquidity to jewelers through the exchange mechanism. We're quite excited because it's the first time something like this is being done in Asia and the Middle East. And so we're keen to try and market this more to our customers across the region.
Fantastic. This is again a very, very amazing achievement, and really looking forward to how it plays out as well. Yeah, big thanks, Sunil, for sharing your views again, and let's see how
Thank
the
you.
markets play out certainly this week, and see you next Monday.
Thank you, Sean.